Aloha, everyone, and welcome to Java. Thank you for joining me this Cyber Monday morning. It's November 27th, 2023. Think I'll have an extra cup of coffee with that one. So, we've got our favorite risk indicator, the MMRI, is up now, still in high territory, but we're down from the extreme level. It's retraced quite a bit. And so that's kind of positive for the markets, basically. The sentiment right now is mixed, but basically risk on at the moment. Going into the markets a bit green. So we've got a weaker US dollar, the elements of the MMRI, as well as the 10-year yield that has come back. So those, it looks to be reversing though. So the dollar is strengthening a little bit. I do expect the 10-year to probably start rising a little back above 4.5. And we've got stock markets right now, even though they're in the green, the futures seeing red a little bit. And I think that we are hitting resistance levels, as I said. So while it's positive for stock markets at the moment, I think that could shift possibly today or tomorrow. Don't have a crystal ball. This is just my uh, best probabilities. Nothing is a certainty, just probabilities. So with this moving into resistance again, we also had the stock markets in Asia were down this morning, but they're steady for now. A lot of the major markets, the funds were told not to sell this morning over there. So that's a little harbinger of trouble. So for our markets, really it's about new home sales. And we've also got tomorrow morning prior to market open will be home price index. We're also getting consumer confidence and then just a trail of Fed presidents, and I expect them to manage the markets with the language that they're using, basically. So, moving forward with what they were saying were booming sales. This story brings it up. Basically, it was price sensitive United States shoppers that are taking early Cyber Monday deals. And like I said, they're showing now that the bulk of this are things that people were already going to purchase and they just waited for the sales. So, uh, the next story I want to move to is something that we've been talking about for a while. And the people analysts that watch the markets pretty closely have been watching the Bank of Japan because they could basically throw a wrench in the works with their monetary policy. So they're kind of coming out and saying that there will be a gradual and phased approach in normalizing their monetary policy. Basically, they're saying they're going to be good and not do anything seriously upsetting to the markets. So hopefully they'll hold onto that word, because I don't think with the enormous amount of debt in all phases that the market would handle it well. So with this, we've got the senior economist at a bank is saying that expectations are that US rates have peaked. So if these rates have peaked, that suggests that it's time to get out of the dollar. So as I was just saying, if the dollar, they're talking about basically going into a hyperinflationary phase to where it would have less value, even less value, at a more rapid rate. And so people would dump dollars all at once and be purchasing everything else, anything from stocks to gold to oil, commodities, anything they can to get out of the dollar. So we've got Deutsche Bank also saying that they expect the US stocks at a record high by the end of 2024. So we are talking about the Santa Claus rally still going on, but as we were talking about yesterday, it can end rapidly and in a not very orderly fashion. We did have terrible Christmas Eve not long ago, and that could very well duplicate itself this year. We'll take a look at that as far as it goes. So, going back into oil, oil is also another major factor for the economic and the dollar value. So, it's been crushed lately, and oil value has declined again for the fourth day. So OPEC Plus was supposed to meet and then agree on the supply cuts that they were going to be doing. Well, they had a bit of an argument, so they decided to put it off to this week. So we will see with a couple of things going on here. First off, if they do agree to restrict the supply, how much they will restrict that supply. So if they do, that's positive for the price of oil will increase, but that also means that inflation will increase in general. So with this, we've also got there. The story is that there are some Greek cargo ships that are refusing now to transport Russian oil because the United States, now that it has Argentina in the back pocket, or so they think, they are now threatening tighter sanctions on any ships that carry Russian oil. So even though the European Union needs this terribly, they are unwilling to take the monetary risk in picking up the Russian oil. So that's two fronts for the oil that are going on. And then the third one is just basically along with the supply constriction, and then along with the lack of shipping, is also that there is lack of supply and production, and that it is now winter. So that's increasing the demand on the other side, because winter is hitting several areas right now. Okay, tied in a little more with trade, I just thought this was an interesting story, and it's really showing what's going on with the sanctions and how it works in the back end. So, European country importing quote unquote banned Russian gold. So, this is none other than the Swiss. So, what they're doing to get around, they're the ones imposing the sanctions on Russia. But they want to get around these sanctions. So, they're saying that anything that was produced or mined prior to the sanctions is exempt. So, they're purchasing that and then they're taking it back, refining it, and pouring it in and selling it as Swiss bars. So, doing the same thing they were doing with the oil. So, the sanctions, and then they wonder why they don't work. So they're absolutely ridiculous, in my opinion. So we've got this quote, mostly as a harbinger of the European Union in general and what's going on, is why I bring this up. So Marcus is head of Bavaria, and he is basically bringing out how Germany is completely helpless. And he's talking about the serious crisis because their lack of manufacturing and the trade that is going down, and they just can't pull themselves out of it. But as we've been speaking about, it's going to take manufacturing, actually producing and building up this trade to get these things fixed if we're going to do it in a realistic fashion. So I'm kind of losing faith as the amount of debt is building. It's becoming overwhelming. And once it becomes completely unable to service, this will no longer be an option. The only option at that point in time is either to hyperinflate the currency away or to reevaluate and basically displace it with a different form of currency. Even if they still call it the dollar, it will be reevaluated and it would be a different form. So, with that, I wish you all a wonderful trading day, Green, and just a wonderful day in general. Until I see you again, my friends, stay free.